built on trust, fueled by kindness, powered by Provisor. Welcome to the Ben Revak Mortgage Podcast.
So Ben, in your opinion, what makes an effective and trustworthy pre-approval?
That's a really good question. And I actually have a story that from yesterday with one of our mutual clients. I got a call from a listing agent and she said, hey Ben, thanks for picking up. I'm looking at a pre-approval here for some clients and it has your name on it. And I just had some questions about it. And we had a little conversation. They had written an offer. You had written the offer and they ended up getting it accepted. So congrats. But the listing agent had questions about if the buyer could qualify for higher purchase price than what they had written into the offer. And so I kudos to her for reaching out. And also as a lender, I want to make sure that I'm not getting in the way of any negotiations that you as their, legal representative might be having. So it's really important for a lender to be able to see the big picture and navigate conversations like that in a way that lends itself toward a win-win solution for everybody. Because I think if I'm remembering correctly, the initial offer was a little bit below the purchase price. And they ended up meeting in the middle, if I'm remembering right. So the pre-approval letter itself doesn't really mean a whole lot. I think it's the reputation of the lender, their reputation in the local community, and the lender's ability to help throughout that negotiation process to get to a win-win without shooting themselves or the clients in the foot unintentionally by sharing something that is going to be detrimental to the negotiating process.
Yeah, like the fact that they were pre-approved for over 100,000 more than what's offered.
Yeah, there's a reason that when I issue a pre-approval, the pre-approval amount and the address line, I leave those editable for the agents that I work with all the time, because the reality is you might want that pre-approval letter to match your offer. Do I really need to go into Microsoft Word and change that myself? Like, what the parameters are, just adjust it and get your offering,
Yeah.
So it's having a core team of agents that I've worked with over the years is just wonderful, because we work in lockstep to make the offers that our clients are writing as competitive and as effective as possible in the most efficient way possible. So as we're going into November, we're getting close to Thanksgiving. Every year, it's like we talk about like this time is like our slow down, like it's our time off. And like, I don't know about you, like I haven't really felt that this year, but when I look out at the market, it's still like I have a bunch of buyers who are under contract with home sale contingencies and their home sales are sitting. And so with your experience, when you look at the market and you see, all right, if house is sitting on the market for a week or two, and if that house was listed in March, it would be sold already. What does that tell you about the real estate market, the health of the market, where things are heading? What is, like, specifically with days on market for listings?
Yeah, I think that pricing strategy is so important in this fourth quarter because of that days on market piece. In the rest of the year, you can kind of not be lenient with your pricing, but you don't have to be as strategic about the number you start at, because the market is warmer, and so buyers are able to find you quicker. But with this, with us being in the fourth quarter and there being fewer buyers searching during this time, it's really important that you strategically price your home, because a lot of buyers are still thinking in the mindset that they have to go over. They have to go overpriced. They have to go 10,000 over, 20,000 over the asking price. So they might avoid seeing your property until they've seen it make it through the weekend. And your goal as a listing agent is that it doesn't make it through the weekend. So how you can do that is strategically price on the lower end of your scale, your range of what it will go for. That way, people will know that if they come in and they do offer over, they'll still be within a healthy range for themselves, but also your home will attract more buyers. So it's important to strategically price on the lower end of your range in this fourth quarter, especially. The truth is that if you have a properly priced, properly prepped, and properly marketed home, say that 3 times, it will sell, and it will sell quickly. But we see days on market go up to 7, 14, 21 days in this top time, and it's really normal. So it's important to prepare your sellers for that, as well as to prepare buyers to know that just because it's sitting a little bit longer doesn't mean we can go massively under asking, but it does mean that there's some room for negotiations.
I love that. I see that too. It's absolutely vital to have somebody who understands that dynamic, because it's really easy to make the mistake of listing too high, especially when you have a client who's like, this is what I want to list at. And ultimately they get to pick, but you can sure advise them that, hey, this might not be the right move, and here's why. And that's one of the things I really appreciate about working with you, is that you are very transparent with your clients about how things work and why you recommend what you do. And I think it helps them make better decisions, because you're able to show them your thought process, not just make a recommendation and hope that they trust you with it, but actually show them why your recommendation makes sense in the market.
Absolutely. An example of this is the listing that we just had, the buy and sell that we just had in Kenosha.
Yeah.
And the Kenosha market is interesting because it has the same as every other market, right? There's some homes that are sitting quite long, and there's some homes that are flying off the shelves.
Yep.
And so when my buyer got an accepted offer on a home that had been sitting quite a bit, we turned around to get her house on the market as quickly as possible. And I really appreciate the way that we were able to work together, because I told her the range. I said, this home will sell in between 300 and 325, right? We obviously wanted 325. That's what they needed to make the other sale happen. But so she wanted to list at 320. She's like, well, list at 320, we'll get 5,000 over. And I urged her against it. I showed her days on market on some homes in the area, and how the ones that sat at a higher days on market price, they sat longer.
Yep.
Even though they got the same purchase price in the end, they sat an extra 12 days,
Which we didn't have because we're under contract for them to buy their new house.
Exactly. We did not have time. So I said, hey, I think that we need to go at $299.9, bring in all those buyers that are looking at 300, and we will get the competition we need to get you to 325. And she was like, I'll trust you. And we listed at $299.9. 3 days later, we had 3 offers, one of which was 325, and we were able to accept it and move forward very quickly, which is exactly what they needed to get their purchase.
Yep. No, that's fantastic. And just the being able to see that pattern of, that's what I call great service. Like, see that pattern of great service, deal after deal after deal, where you're in the moment with the clients and you figure out the solution that makes sense for the situation. Like, it's so contextual, it's so situational, and the right answer might be different for every situation, but being able to articulate to the client, here's why. And then I like to help too, because they're like, well, what does that mean for our home purchase? Well, it's easy for me to simulate that in our total cost breakdown to show them, like, hey, here's what your total proceeds are going to be based on the net proceeds calculation that you do off their home sale. Here's our worst case scenario. Here's what your loan structure looks like for worst case scenario. Here's what, if it sells for 325, here's what your loan structure can look like. Here's your options for if you want to keep a little extra cash out as part of the transaction, pay for the new appliances in the new house. And just being able to really help people throughout that and give them the confidence they need to make a competitive offer on their next home and make good decisions about listing their current home. Like, helping people through that, it can be really stressful, but it doesn't have to be. And I love working with you because we do a really good job of helping people who have no experience in that navigate it in a way that it's as smooth as it can be. And that's not saying there's not hiccups on some deals. There's sometimes stuff comes up. I just had one, a gal lost her job. And it sucks. There's nothing you can do about it except go find another job. We'll help her figure it out, and we'll find a way through it.
Yeah. So, I think knowledge is really power in these situations, because the more you're able to inform your client and the more they know, the easier every decision makes.
Yep. And I think wisdom too is applying that knowledge in a way where the everybody involved in the transaction is able to work towards a win-win. I'm sure you've worked with some agents who they let their emotions take over. And you can just tell, you hear it in their voice when they call you. You're like, we're on the same team. Like, even though you represent the sellers and I represent the buyer, we're all on the same team. And that mentality is just priceless in the real estate industry, because it's a really, really small industry.
Yeah.
All right. So I know a question you get all the time, Megan, is, well, what do you think about just waiting for rates to come down, and throw a number out there? I want rates to hit 5% before I buy a house. I get that question all the time too. What is your philosophy, and how do you answer that question when a future buyer asks you, what is it, does it make sense to wait for the market to shift? Or does it make sense to wait till X date, or does it make sense to wait for rates to come down?
Yeah, that's a really big question. And I think it's multi-tiered, because for some people, it does make sense to wait. If you do not have the reserves to afford the home that you were hoping to purchase, then maybe it does make sense to wait for you. Or if you're trying to pay off other things, or if you're trying to wait for your lease to end, there are circumstances where it does make sense to wait. I just don't think that waiting for the rate is the best circumstance to wait.
Yeah.
I was around when rates were down to 3% in 2020 and 2021, and it was crazy. Just crazy.
80 offers on a single house.
Yes. And so when I hear people wanting to wait, I cringe a little bit because I know that they're going to lose some of those protections that we can put into an offering. So they're going to lose that opportunity to have, an appraisal without a gap, to have an inspection, to have negotiations post-inspection. Those are the things that I just yearn for my first-time buyers. And so when they wait, it doesn't mean that they're going to lose those opportunities. That's not the case always, but it does mean that it's going to make it harder for them to get that perfect home because they're going to be competing against, what's the statistic? You might know it off the top of your head, but when the rate drops 5%, like 1 million more buyers enter the...
I don't know it off the top of my head, but
that sounds about right.
When rates drop, more eligible buyers, so the demand goes up and supply side doesn't change.
Yes. And so I see that all the time. I see people waiting, or even just waiting until like the spring, or waiting until, I always joke that I know why my fourth quarter is always so busy, and it's because I tell everybody to buy in the fourth quarter.
Mm-hmm.
And I do that purposely because buyers are able to, we just got an accepted offer with a first-time buyer. They were able to go 15 below on their first offer.
Yep.
And
they got it.
Yeah. And it's like, that's the kind of energy that you have in fourth quarter. You're able to go lower. You're able to get a full inspection. And that's really important for buyers, and even just for education. So I think that there's never a you need to do it now, but there is a don't sit around waiting for it to just happen, because who knows when the rates will come down and who knows what will happen when they do.
I think that's true in life. Like, I'm going to wait for X to happen, like this thing in the future that has no real impact on what I'm trying to accomplish.
Yeah.
It's almost like a mental fallacy, like a logical fallacy. Like, it doesn't make sense. Like, if you're going to base a buying decision off of the mortgage bond market and the broader interest rate market, like, it just doesn't make sense. Like, so rates go down and home prices go up. Like, it's all correlated. Like, it's not like you're going to get a deal over someone else. You're going to be competing in the same market with the same buyers and the same sellers, regardless of where rates go.
Mm-hmm.
And if you own a home and you have a mortgage and rates drop, you can refinance to a lower rate.
Yes.
You can't refinance to a lower rate when you don't own a house. So it's like, why not take what you can today? You need a place to live.
Yes.
And as long as the numbers make sense, right?
Yeah. Make sure the numbers make sense, because again, at the end of the day, buying a home is a really, really big emotional decision to make sure that you are ready to own that home. You're ready to financially that's where you're going to put most of your money, right? So if you're not ready to make that decision, don't make that decision off of just the interest rate. Make it off of your life as a whole. Are you happy in your job? Are you happy in your relationship? Are you ready to take that step to own a home? Don't just be like, I need to make sure the rate's lower, because again, we won't be able to always know what's going to happen next.
Yep, 100%. And rates are going to be the same for everybody across the board. And if they go up, you'll be glad you bought now. If they go down, you'll refinance.
So I know you like to avoid surprises at all costs.
I do.
So what kind of closing cost surprises have you seen, and how do you avoid those?
That's great question. If I've done my job right, there won't be money surprises, because we can pretty much figure out before you write an offer what the numbers look like. And that's really what I think the most important thing that I can do as a lender is helping buyers understand those numbers so that they can make educated decisions when they're writing an offer or accepting an offer on a home sale, whatever it is. So if I've done my job right, there won't be surprises. That said, sometimes there are things that I'm not aware of or are completely outside of our control that we have no way of knowing. The two that come to mind are, I had a deal. The client was selling a home out of state, and they ended up owing back taxes on it was a primary parcel that their home was on that they were selling, and then there was some adjacent lots that were also included with that. Well, there was a problem with the tax billing for those adjacent lots, and it ended up they owed like $12,000 in back taxes from the last like 8 years. There was no way anyone was aware of that. So we were basing their new purchase off of their estimated home sale proceeds that ended up being $12,000 less than what we were anticipating. And there's really no way to find that out ahead of time. So the title company wasn't even aware until they started digging into it and working through the sale once the sale was already under contract. So now, had the client been aware of that, we would have known. But, that's a surprise. And it's also something that there's really no way to know. Another one that I don't see nearly as often anymore, thankfully, is during COVID, you were able to put your mortgage into forbearance. And what they would do is they would take that forbearance chunk, they'd add it on to the back end of the loan, and that chunk wouldn't show up on your current balance. It would be added on as like a loan modification. And we wouldn't be aware of it until we got the payoff quote. And so there was a couple of deals. I don't know if I ever had one myself, but I had a few coworkers who they get the payoff quote on a home sale, and all of a sudden their net proceeds dropped by $11,000 because they had 6 months worth of mortgage payments that were deferred during COVID added on as a chunk to be paid off at closing. And so that really threw a wrench in a lot of deals. But overall, I don't really run into a lot of surprises. Once in a while we'll get like and it's not agents that I work with normally, but sometimes I'm working with a client who is an agent that I don't usually work with, and they'll write the offer up waiving the tax proration and not explain to the client what that means, that they're actually going to bring the difference. And then I end up explaining it once they're already under contract, and it usually works out, but it's not a pleasant surprise.
Yeah.
So there's things like that come up occasionally, but it's really pretty seldom, thankfully. If I've done my job right, it's not going to happen.
We love a boring answer for surprises on closing costs.
That's about as boring of an answer as you can get, right? Like, yeah, it occasionally happens, but not really.
I mean, those are really odd circumstances, and a lot of them revolve around owning a home already. So for those first-time buyers,
There's really none.
Yeah.
There's really none.
Yeah, when first-time buyers are really scared about those closing cost surprises, I think that closing cost breakdown that you provide just eliminates those, like, mostly.
Yeah, it really does. I can't think of any, like, I really don't have any, Megan. It just doesn't happen. Like, it's easy to figure out what their closing costs are going to be. So in the current market, like, we're going in November, for context, November 2025, what negotiation strategies or tactics are you seeing that are working and which ones are not working? How do you use those different tools in your tool belt in November leading up to Thanksgiving?
So I think from a buyer's agent perspective, if I'm going into a deal, there's less room for the seller to use I have multiple offers to go to, or I have multiple other buyers looking for my property. So it actually makes agents and clients actually have to negotiate. They have to talk about the purchase price. They have to talk about the inspection amendment. And instead of just being able to throw up your hands and say, well, I'm going to walk away and find somebody else.
Yep.
Which I love because that's our whole job.
Yeah.
So yeah, you actually have to negotiate with your client and know the area and know what the home is going for, because again, it might be lower right now in the fall market because homes always dip right now in the fall market. So knowing that, hey, I'm going to buy this now when it's dipped, but I know it will be worth this much in the spring or in the next few years. So as much as we can't predict how things will go, but we do know that we're able to kind of project a little bit, especially 6 months out, and make sure that the buyer feels comfortable offering what they're going to offer. But I don't see a lot of being able to just throw your hands up and walk away, which is my favorite because I hate that strategy. Yes. Another thing that I've noticed a decrease in this entire year, I think it's been over a year and a half that I've written an offer with an appraisal gap.
Wow.
Yeah, I mean, that's also like a personal thing. Like, I don't like appraisal gaps, so I will avoid them at all costs.
Yep.
But yeah, I don't think I've seen those recently, whereas the previous years, it was every single offer I had to write an appraisal gap. Otherwise, they wouldn't get accepted. Yeah. So I am really impressed with the lack of appraisal gaps in what I've been seeing. And I've also been limiting my inspections way less. And that's kind of a thing I see every quarter for, is that we're able to stop limiting inspections and just get a full inspection. Honestly, in the summer as well. But in that spring period, that's really the one time where we need to limit and or waive that inspection, which is a difficult task to do. But But yeah, I don't see appraisal gaps very often, and I don't see limiting the inspection.
Is that a spectrum? Like if the house is one day on the market, there's two other offers, you're going to lean more on the side of like, hey, we got a multiple counter and they want an appraisal gap. Like we got to talk about it, like with your buyers. Or is it like more of a, you feel good just not doing it at all?
It's interesting. People get less competitive in the fall. So an example that I have that's actually not my transaction, but it's my team lead. So my team lead, she and I both toured the same property with a set of buyers, and it's a property that in Waukesha at 300. And if you know anything about Waukesha County or the city of Waukesha proper, a 300 house is hot, right?
Yes.
And this one was even better because it was fully updated. It was super nice. It was a great layout, perfect backyard. Like
for 300,
right?
Yep.
So I had a buyer that was interested, and she wasn't quite ready to offer, but I wanted to use this as an education tool. Like, let's go look at this house and see what it goes for later on, so that when you are ready to fully buy, you'll kind of have that education and that knowledge, right? So we go tour this house. We walk through it. I get all the way out of the house and I'm like, this is a 325 house. Like, I just know it. I feel it. This is a 325 house. And I tell my buyer that. And I'm like, obviously we're not offering today because she wasn't quite ready, but I want you to know that I would suggest you offer 325. And
if she was right.
She was right. And let's watch the house and see what it goes for. Now, little did I know, my team lead had already gone through that house earlier and already written an offer, right? And there was 3 other offers on the table. So we get to talking, and I understand what she writes on it. They get it accepted. Now, this will all close before this comes out, but she got it for $320 with the $4,000 seller credit.
Wow. Right. So effectively $316.
Yes, effectively $316.
Yep.
Which I think 100% I will put it down that's $325 house in the spring market.
Oh gosh, at least.
And she got a full inspection, she got a $4,000 seller credit, and she got $320, right? And I think that just shows you how those other offers weren't as competitive for the ability for her to get a credit, the ability for her to get a full inspection. That wouldn't happen in the spring market, especially for a 300 house in Waukesha. But that kind of just shows you that in this time, in the winter time, it changes how we negotiate, and it changes how we go after offers. Like, I would never have gone after that offer that way in the spring, because there wouldn't have just been 3 other offers. There would have been much more.
8 or 9.
But even with the 3 other offers, you're still able to add in those seller credits, add in the inspection, add in those things in the fall market. You don't have to risk not having those in there just because there's other offers, because chances are they're not being as competitive.
That makes perfect sense. Yeah. So you're really adjusting to the market to get the best possible deal for your buyers.
Yes. And doing what works best for them. I mean, for these buyers, for their circumstance, they could have gone 316 and gotten the accepted offer, right? But it was better for them to go 320 and get that seller credit. So it just kind of depends on what's best for them.
Yep. That's fantastic. Yeah. It's just adjusting to whatever the market will give you.
Yeah.
Awesome.
Ben, what's the most common misconception about your job?
I think it depends on who the type of client or person asking. But I think one of the common misconceptions that I get is that my opinion is going to influence whether you get qualified for a loan or not. With one of the way that lending works, especially in mortgage lending, is that with all the regulation around fair housing, equal lending, equal credit opportunity, as a loan originator, my job truly is helping buyers understand what their loan options are based on the parameters of their financial lives. I don't get to create the underwriting rules. I get to help people understand how their situation fits into the underwriting rules. And so whether I think a loan is a good loan or not really has nothing to do with whether we can get it approved. And so that's probably the biggest misconception of it, is like, as a loan officer, well, Ben's a good loan officer, he gets loans done. Like, no, it's not. It's really just doing the due diligence up front to make sure that they'll qualify once they get under contract. And so my goal is, if I give out a pre-approval, like, I've done the due diligence to ensure that they qualify and they will close. That's my that's my reputation. And so that's really my focus as a loan officer. It's really not within my control whether someone fits within the box. And there's times where I just had one yesterday. I feel really bad about this one. Helping a client, he wants to buy a duplex. He was renting. And when you have a housing payment currently, you're able to use rental income on the next home you're buying to help qualify you for the loan. So you rent an apartment, you're buying a duplex, you can use, I think you'll live in half the duplex, you can use the rental income from the other unit to qualify to buy that duplex. When I pre-approved him initially, that was the case. Well, in the meantime, the client moved into his grandparents' house because they're wintering in Florida, so he doesn't have a housing payment. Well, both Fannie Mae and Freddie Mac rules say that if you don't have a current housing expense, you're not able to use rental income from that purchase. And I think it's a silly guideline. I can see why it's in there. It's to prevent people from buying investment properties as primary residences without ever intending to move into them while continuing to live rent-free somewhere. So that's the spirit of the rule. But in this case, like it has a negative impact on this individual. So I feel bad. I'm the messenger in that case, but there's really no way around that rule. So it's like, sorry, you got to go pay rent somewhere. And then you can do that, or you can buy a single family house. So my job really is just navigating through those rules in a way that gives people confidence to make good offers and make strong offers. But I really can't change the rules.
Yeah.
And there's times where I feel bad about it. But that's a really good question. What about you? What are the misconceptions about what you do as an agent?
Well, there's lots of misconceptions. I think, like, I hear, you're just there to open the door, stuff like that.
Yeah, there's a little more to it than that.
One of the things that I really have found, especially with the people that I'm working with, is that my value is not in finding the house. So obviously, like, I send listings, I keep my eye out, I keep my ear on the ground for if anything's off market coming. That's all really important. But a lot of the times I'm not finding the house that's the one for you. And so I think that's a big misconception, is they think that when they tell me what they want, I'm going to magically just like pull it out and be like, yep, here's the house, right? And that's not where my value is. My value is getting that house when we find it. So it's the negotiations behind that. It's knowing the market, knowing what we need to offer, and knowing what that home will go for, as well as, the strategy behind negotiating with that other agent to get the offer accepted. And then all of the stuff that comes after the offer is accepted to get it to closing. So I find a misconception is that I'm going to be this magic matchmaker. And I see people, market themselves like that. And if like that is one of your superpowers, that's awesome. But I'm not the best matchmaker. But when we find that house, I will get it for you. Yeah. So I think that's where my value lies, and where that misconception is. I mean, obviously, I will do my best to find you a house, but
if it's not on the market, you can't create it out of.
Yeah, I'm not out there building them.
Yes.
I
want 4 bedrooms, 3 baths, under 300 in Waukesha County.
Yeah, and I'm not a magician, and I don't build houses. But I can find some. I can find the way to get you that house when we find it. Yeah. And so I think that's the biggest thing that I do as an agent, and that the majority of agents do. We're not out there with our microscopes, looking for these houses. But...
Yeah, well, not to throw any shade at someone who's just getting started or who doesn't do it full time. That's one of the big differences that I see between full-time agents and agents that do it as a part-time job on weekends. They work a full-time job, or they're brand new and they don't have experience. They don't understand what it takes to get that accepted offer and get it to closing. And that's where as a buyer, having an agent who's experienced in the local market you're buying in is absolutely priceless.
Mm-hmm. How do you see your job evolving over the next 5 years?
I think that as we move further towards technology having a more prevalent role in every industry, that relationships are going to become even more important. And right now in mortgage lending, all the talk is around data. So you have big companies like Rocket who are buying loan servicing companies with the intent of being having exclusive rights to market to those clients to refinance when rates drop. And that's a great strategy for refinancing for a company like Rocket. As a loan originator, what's important in my world is the relationships that and the trust that I've built in the local market. And I think as technology takes over, continues to grow, it's going to give even more opportunity for people who actually answer the phone to have a bigger slice of that market pie. Because when you have a question, you know that when you ask ChatGPT, it's going to confidently tell you the wrong answer at least 20% of the time. And so you don't really want to have that in the back of your mind when you're asking it about closing costs or how to structure an offer or how your loan fits in with the fact that you are getting a promotion at work. Like, there are so many variables that can affect buying and selling houses, and having the ability to talk to someone on the phone who's experienced is priceless. And I think that level of priceless is going to become even more valuable as time goes on. So I think my role is going to continue to evolve to be more conversation relationship based. Mortgage guidelines are going to continue to change as they have over the last 5 years. They'll continue to change over the next 10 years, 5 years. It's not going to, that part of the industry will always be changing. But my role specifically will just continue to be more people focused, more conversation focused. And as I continue to grow my business, I think I'm going to have to continue to grow my team to support the volume that I'll be doing as I am now. But it really is going to just be more relationship and conversation focused. So I don't think anything dramatic. Like, I don't anticipate having a Optimus robot, like taking calls and talking to people about like taking an application over the phone or something. Like, I just don't see that happening.
Yeah.
So how about you though?
Well, that's super interesting. And, I think about my business a lot as an entrepreneur, just like what I'm going to be doing to change my business. But as a whole in the industry, I don't necessarily see what everybody else is going to do. So I see something very similar for myself. I mean, continuing this relational based business is really, really important. I find that, I mean, even for myself, buying and selling homes, like personally buying my home, that's a really big emotional decision. It's emotional, it's stressful, it is straining on not only myself, but on my husband, on our relationship. It's stressful, and to have somebody to turn to is really, really important in those situations. And not only somebody to turn to, but somebody to turn to that has a level head, that knows what you've been through, has gone through it themselves, has gone through it 20 times this year with other people, and knows the next steps and can give you a clear picture of what's lying ahead. So I think that that's never going to go away. You're always going to need somebody. And like you said, real estate's so hyper-focused that it's really, I mean, it's different in Waukesha versus Field, which is just
dramatically different.
Dramatically different. So you really need somebody that's there, that's doing the work, that's in the trenches, that can tell you, hey, this is what you're seeing ahead, and this is what you're going to go through. And when little things pop up, when the inspection goes bad, when the septic fails, like, you need somebody that's going to be able to be like, hey, this happened, now this is going to happen next. Here's our following step. That way you're able to feel guided. And that's just never going to be, like you said, ChatGPT. Because it's just so different in every situation. You're not able to get hyper-focused in that. So having a real person is going to be really crucial. And I see that for myself as my business continues to grow. I mean, I just want these relationships to continue to flourish and be able to help people, help their families, help their friends, and make sure that everybody has the same level of a smooth sailing experience that they had when they share me with their friends. So yeah, I see a lot of relationships in my future.
It really is just helping people. Like, you can boil it all down, and it all boils down to helping people.
Absolutely.
It's kind of a fun industry.
Yeah.
So if you were to sum up the process of buying a house from a client experience at a high level in like 30 seconds or less, what does that look like?
So there's a roadmap that I always use on my buyer consults to talk about the buying process. And it really starts with, first you find your team. So your team is me and a lender. I recommend multitude of lenders so that they can test out and see who fits them best. A lot of them choose you. And you find your lender. Once you're pre-approved, you start your search. The search lasts as long as you need it to last. So some people, they see 1 to 5 homes and they find the house. Some people see a few more. I find that people find their home quicker than they realize. So it's usually between 1 and 5. You can go on as many showings as you want. Once you are on those showings, you write offers. Now, offers is a really collaborative process. I am really honest with my buyers on what I think they need to write in order to win that offer. And because of that, I'm able to have a higher accepted offer to offers written ratio because I want to make sure that when they're shooting their shot, they're going to get it.
Yep.
So it's a really collaborative process. From that process, it takes 30 days to get from there to closing. And in that closing process, we will be going through the stepping stones that we lay out in the offer. So we're going to lay out what stepping stones we choose, such as an inspection, an appraisal, loan commitment, title, maybe a well and septic inspection. We're going to lay those all out in the offer. So we'll know exactly what's coming over the next 30 days. We'll take those 30 days and we'll complete those steps. And then we'll get to the closing table.
It's really not much to it.
Yeah, sometimes it takes 45 days in total for it to happen for somebody. Sometimes it's a year and a half. Like it really depends on how long you need to take the process.